all the members might have benefited from the study course, as we tried to cover all the topics which would be helpful for us to finalize the company audit for the coming year. Today's topic is on notes to accounts and written representation, and we have our own CA member from the branch, very learned speaker Rajendra Daga sir with us. Before we go ahead, the committee has 3-4 announcements to make. Let us first cover all those, and then we'll start with the session. Tomorrow, on 15th, we are honored to host Member of Parliament Supriyatai Sule in our branch premises. Supriyatai Sule would be there to interact on the issues related to various policies of the government and related to the problems faced by chartered accountant, which will be in the morning 10 to 11:30 a.m. at the branch. So it is requested for all the members to join for the session. On 17th evening 6 to 8 p.m. we would be having our second meet on our DT study group meet. Case studies have already been circulated to all the registered members. Please go through it, and we will have a healthy discussion on all those case studies on 17th evening 6 to 8 p.m. On 19th, we have organized a public meet on the issues and all the recent amendments related to charitable trust, where our own senior member Rahakar sir would be there to guide, and it would be having a chief guest of our beloved MS Gosavi sir. It is requested to all the members to ask their trustee clients to attend the same, as it would be helpful for them to understand what all different compliances they need to make related to charitable trust. So it is requested to all the members to let their trustee clients know about the public meet, and see to that they attend it on 19th evening. Circular for the same would be sent just today itself. Further, it is requested to all those who have not yet availed the benefit of one-time fees to avail it, as we have a great programs lined up in the coming year. So please avail the benefit of one-time fee. And as we are concluding this study course, we are planning in the month of June the second study course, which would be on tax audit, which would be again ranging for 5 days, where we will have 2 hours every day, a particular topic which would be helpful for us to finalize tax audit for the coming year. Now, going ahead with the today's session, I request our branch secretary, Sanjeevan Tambulwadikar, to introduce our today's speaker, Rajendra Daga. Over to you, Sanjeevan.
Thank you very much, sir. Before introducing Daga sir, I just want to add to what Abhijit sir said. We are also having 2 other study groups, and many members are yet to participate in the same. We will be having fruitful discussions on various practice and industry related issues in those groups. So I request everyone to participate in them. So further we can take up those, and we assure that everyone will benefit from it. Further, today we are having a session on notes to accounts and written representations under company audit. We have our learned and senior member of our own branch, CA Rajendra Daga sir. He is a very senior member and practicing since 1981 with more than 4 decades of experience in corporate advisory, audit and assurance, and taxation. His main areas of interest are corporate laws, corporate restructuring, corporate taxation and assurance services. He has also been a past managing committee member of Nashik branch and acted as secretary and chairman. He has delivered many lectures on topics like audit, company law, accounting standards, restructuring, taxation at various forums and professional bodies and at corporate forums. With this short introduction, I will not take much of your time, and I request Rajendra Daga sir to please take over the session.
Good evening, friends. I have been assigned the task of discussing the issues related to notes on accounts and written representation. I am very much thankful to the branch chairman, Sohil, and his team for giving me an opportunity to study the subject in depth. During my study, I found certain issues which we will discuss. In present day scenario, auditor's definition is changing. What does the auditor mean today? Someone who does precision guesswork based on unreliable data provided by those of questionable knowledge. Though this definition seems to be funny, it has some truth, and every auditor, particularly auditors of SMEs, has to face this situation, because in real world and with the persons they are dealing, they are facing such situation. Now coming to the subject proper, notes to accounts are somehow called as notes on accounts. What exactly the notes of accounts mean to accountant and auditor? So before going to the details, I will discuss a case study. A small case study. It is a real life case study, recent case study. XYZ Limited had taken a loan of rupees 90 crores from an entity known as ABC. Charity Limited, a company registered under earlier Section 25 of the Companies Act, that is current Section 8 of the 2013 Act, acquires a debt due by XYZ Limited to ABC of rupees 90 crores for a consideration of rupees 9 crores. XYZ Limited issues shares of rupees 90 crores to Charity Limited in satisfaction of debt and in lieu of debt due by XYZ Limited. This case pertains to a NGO related to one of the big political party, and in this case, Delhi ITAT on 31st March 2022 has given a verdict and had levied a penalty of hundreds of crore rupees on the NGO. Thereafter, the auditors of those entities have come into limelight, and I am told that, or rather it has come to my knowledge, that auditors are facing problems because they did not disclose anything in their audit report as well as accounts. So issues in this case was whether disclosure is required by XYZ Limited and Charity Limited in its financial statements. Consequences if both companies do not disclose anything in notes of accounts. Duties, responsibilities, and liabilities of auditors and management of XYZ Limited and Charity Limited. The high-profile auditors of those companies are facing inquiries from the institute as well as MCA, and it is known that MCA has also issued notices and institute has also issued notices to those auditors. So in such a scenario, what went wrong will come into picture after inquiry or this one. But after this, auditor has to take care, accountant has to take care in respect of notes of accounts. So this is one of the recent decision of IT80. I am not dealing with IT80 decision, but as an offshoot of this decision, auditors are facing inquiries, and ultimately it is very likely that high profile auditors may land into trouble because of the non-disclosure in audit report or in financial statements. Now coming to the subject proper. So what is the definition of notes of accounts in Companies Act? Companies Act do not define notes of accounts. However, the definition of financial statements contained in section 240 of the Companies Act have a reference that financial statement includes any explanatory note annexed to or forming part of any document that is balance sheet, profit and loss account, cash flow, or changes in equity. Thus, notes of accounts are equivalent to balance sheet, profit and loss account, and any other financial statement. It has equal importance as that of balance sheet, profit and loss account, or cash flow statement. If we see definition of notes of accounts, notes to accounts or notes of accounts are not defined, as everybody knows. But as per Companies Act, they are treated as financial statements. Cambridge Dictionary says that information added to company's account that explain to something is notes of accounts. Longman Business Dictionary says it is an explanation of a particular item in a company accounts. Wikipedia says additional information added to the end of financial statements that help explain specific items in the statement, as well as provide a more comprehensive assessment of a company's financial conditions, are known as notes or notes to financial statements. We have a reference of notes of accounts in AS1. Ind AS1 says notes contain information in addition to that presented in the balance sheet, statement of profit and loss, statement of changes in equity, and statement of cash flows. So it is an additional information. Notes provide narrative description or disaggregation of items presented in those statements and information about items that do not qualify for recognition in those statements. So items which do not find place in balance sheet, profit and loss, or cash flow has to be disclosed in notes. So what can be the meaning of the notes? If we interpret other way or explain information in financial statements that gives more details, or details and comments on the information presented in the financial statements. Notes to the accounts reflect the accounting principles and the facts that can have a significant impact on the judgment of the reader of accounting information. Or what can be said about notes of financial statements? Those consist of details related to the information mentioned in the main body of financial statements. Those notes are footnotes in form of important accounting policies, company's commitments, breakdown of sales or purchases, details of assets and liabilities, potential profits and losses. Information provided by notes to accounts is critical for concisely understanding and evaluating the financial statements of the company. So this we can deduce from any information given, or what is the importance of the notes of accounts. Investor who only focus on the main body of financial statements and oversee the notes commits a grave blunder, as they can be easily misled that way. The notes may serve, but they are not to be undervalued while analyzing the financial statements of the business. There is a good way to read the financial statements from bottom to top and from back to front. So it is always advised that while reading any financial statements or balance sheet of any company, first read the notes and then read the financial statements. That is the main statements like P&L account, balance sheet. Financial statement notes are supplemental information that is included with the published financial statements of a company. The notes are used to explain the assumption used to prepare the number in the financial statements, as well as accounting policies adopted by the company. They help the different types of users as financial analysts or investors to interpret all the added to the financial statements. Notes provide information about accounting policies, use of accounting principles, accounting changes, non-monetary transaction, fair value business combinations, revenue recognition, commitment, contingencies of legal and financial nature, risk and uncertainties. Accountants use estimate to determine many of these amounts. We know that accounting is an estimation after all. These estimates are based on some assumptions. Those are reasonable. Financial statements are filled with assumptions. However, part of accounting is being able to tell a financial story, and the notes provide the accountant with the level of detail needed to communicate the full story. So this can be the importance of notes. Notes offer supplementary information that clarifies and explains data on the financial statements. For example, notes to financial statement will explain the accounting media used in presenting the data. This is important for understanding the figures presented, as accounting methods vary from company to company. Without this additional material, a comparative financial condition cannot be fully analyzed. A company's financial position or comparison with different companies cannot be analyzed. Footnotes to the financial statements refer to additional information that helps explain how a company arrived at a particular figure. It also helps in irregularities or inconsistencies on year-to-year account methodologies. It functions as a supplement, providing clarity to those who require it without having the information placed in the main statement. Nevertheless, the information included in the footnote is often important, and it may reveal underlying issues with a company's financial health. So without notes, without referring to the notes, the financial health of any company or any entity cannot be ascertained properly. Information supporting that is given on the face of company's financial statement. That is the importance of notes of accounts. Many notes are required to be given by law. So there is a legal requirement, as we have in Schedule 3 of the Companies Act, including those detailing fixed asset, investment, share capital, debentures, and reserves, n number of items. Other information may be required by accounting standards or may be required to be given by regulators to facilitate users' understanding of the company and its current and future performance. So that is the importance of the notes to accounts or notes on accounts. So in context of the company audit or company accounts, where we find the place important of notes to accounts. So it is the Schedule 3, which contains reference of notes to accounts at various places. So Schedule 3, what are the legal provisions in context of company's accounts? So general instruction para 3. Notes to account shall contain information in addition to that presented in the financial statement and shall provide where required narrative description or disaggregations, means details of items recognized in those statements and information about items that do not qualify for recognition in those statements. So, Schedule 3, Para 3, Clause 1 itself says, so notes are narrative description and details of items which are shown in the financial statements, that is P&L account, balance sheet, and cash flow. And informative part that do not find place in those statements. Clause 2 again says, each item on the face of the balance sheet and statement of profit and loss shall be cross-referenced to any related information in the notes of accounts, notes to accounts. So notes and balance sheet and profit and statement of profit and loss, wherever related to each other, should be cross-referenced. In preparing the financial statements, including the notes accounts, balance shall be maintained between providing excessive detail that may not assist users of financial statements and not providing important information as a result of too much aggregation. So if we aggregate a figure in balance sheet, so details can be provided in notes on accounts, which should be useful for users of statement, but too much aggregation should be avoided and details should be provided properly. So these are the requirements of Clause 3, Para 3. Para 4 of General Instruction in Schedule 3 says previous year figures should also be given in notes to accounts. Wherever financial figures are placed in any notes of accounts, the reader must be provided previous year's figures always. So as we have previous year figures column in profit and loss statement, balance sheet and cash flow, same year's figures on the same quantum, on the same basis should be provided wherever applicable in notes of accounts. Now coming to the proper details about the balance sheet. Schedule 3, Part 1 relates to balance sheet. Here, if we see the format of the balance sheet, the column number 2 in the balance sheet itself is titled as note number. So balance sheet requires cross-referencing of the details given in the notes wherever items are appearing in the balance sheet. If we see the balance sheet format in Schedule 3, the words appearing "see accompanying notes to financial statements" appear at the bottom of the format of the balance sheet. That means notes wherever applicable as per Schedule 3 must be given. Para 6 of Part 1 of General Instruction for Preparation of Balance Sheet mandates various disclosure which are to be given in the notes of accounts in respect of balance sheet. This Para 6, I am not reproducing or reading here because it runs into pages. it gives the detailed description and detailed instruction for each and every item. We had a discussion about Schedule 3 reporting requirements, in which certain items were discussed. I am not going to discuss all the requirements of notes relating to balance sheet, but we have some reference what it requires to be disclosed in respect of balance sheet. Even if we come about a share capital, which is the first part on the liability side, that is item A in para 6, it contains number of items of share capital, what requirements is to be given. Similarly, we have detailing requirements in clause B. Reserve and surplus, we have to give the various types of reserves separately. Nature of reserve. Other important factor which we must note that surplus in the statement of profit and loss, disclosing allocation and appropriation such as dividend, bonus share and transfer to or from reserve, that is addition and deduction since last balance sheet, is to be shown under each of the specified heads. So question arises when there was 1956 Act, there was Schedule 6 in which we had a separate format. Their debit balance in statement of profit and loss account was to be shown on the asset side. Now, after coming into existence of Companies Act 2013, any balance in profit and loss account has to be shown under reserve and surplus. Debit balance of statement of profit and loss shall be shown as a negative figure under the head surplus and not on asset side. Similarly, the balance of reserve and surplus after adjusting negative balance of surplus, if any, shall be shown under the head reserve and surplus, even if the resultant figure is negative. So net balance in P&L account, if it is a credit balance, it will be added in reserve and surplus. If it is a debit balance, it will be shown as a negative figure and resultant balance will appear under reserve and surplus, not on the asset side of the balance sheet. Long-term borrowings, we have already discussed in a separate session how it has to be disclosed. Secured, unsecured, guarantee given by directors, terms of repayment has to be shown. It happens many times. In notes, we give the details about security, but the Schedule 3 requires that terms of repayment of term loans and other loans shall be stated. So, if it is a loan from bank or institution, whatever the major terms, that is number of installment, periodicity, rate of interest, security, etc., should be disclosed in notes of accounts. Even other loans, loans from directors, directors' relatives, intercorporate loans, terms of repayment has to be disclosed. If they are not decided, the matter should be stated. The default quantum of default and extent of default in repayment of term or continuing default as on the date of balance sheet date in repayment of loans and interest has to be specified in notes on accounts. So it is also a part of notes of an account, default in repayment of loans and interest. Long-term provision, short-term, long-term liabilities, short-term borrowing, we have a host of details. Interest accrued but not due on borrowings has to be shown under other current liabilities. If interest is deferred and it is payable after 12 months, it has to be shown and other long-term liabilities, not as a part of long-term loan. In many cases, income received in advance. Income received in advance for the next 12 months from the balance sheet date has to be shown as other current liabilities. If any entity has received income which is beyond for a period more than 12 months, then income which is received in advance for a period beyond 12 months will be shown not as an other current liability, but other long-term liability. So this difference between current liabilities and non-current liabilities has to be kept in mind while giving in notes also, and figures in the notes and figures in the balance sheet must match. Some companies, private companies or even unlisted companies receive application money pending allotment, or application monies which are due for refund. Advance towards allotment of share capital has to be shown as a current liability, other current liability, and not under share capital. So all these instructions, all these issues are given in Schedule 3, balance sheet, para 6. In respect of assets, tangible assets, assets taken on lease should be shown separately. Wherever there is a revaluation of assets, the revaluation details are to be given in 5 years, for next 5 years. Basis of revaluation, other details which are given. Loans and advances, there are a host of details which are to be given. In respect of investment, there is a bifurcation. If investment are carried at cost, basis of valuation will be a cost model. But if it is not carried out cost, the valuation, basis of valuation should be given. Further details of investment, quoted investment, unquoted investment, diminution in value of investment, investment in companies which are subsidiaries or fellow subsidiaries or related parties should be given separately. Similar disclosures are respect of advances, loans and advances, current assets, non-current assets, inventories are required in notes of accounts. Particularly in case of inventories, there are n number of items, but stores and spares and loose tools has to be disclosed separately as a line item in notes of account. Though aggregate inventories are disclosed in the face of balance sheet, inventories has to be classified as raw materials, work in progress, finished goods, stock in trade, in respect of traded items, store spares, loose tools, and others. Others may include fuel and other items. Goods in transit has to be shown separately under the relevant subhead of inventories. So goods in inventory, goods in transit in respect of raw material. Even in case of manufacturing companies, when material is sent outside for processing and is lying with the processor or is in transit, then work in progress in transit has to be shown separately. Another important feature which some chartered accountant forget to mention in respect of inventories is mode of valuation has to be stated. Method of valuation and mode of valuation are different. Method of valuation normally mandated under as per AS2, cost or net realizable value, whichever is less. But when you follow any method, what is the mode of valuation? Mode of valuation in respect of cost, mode of valuation can be FIFO or weighted average or whatever it may be. So this is the mode of valuation, average cost method. So this mode of valuation, if it differ from category to category. So in respect of raw material, cost formula might be FIFO. In respect of work in progress, there might be weighted average or standard cost. So this mode of valuation has to be stated in notes on accounts in respect of inventory. So trade receivable, we have n number of disclosure which are already discussed separately. Cash and cash equivalent we have to disclose. One important point which lost sight of is balance with banks to the extent as margin money or security against the borrowings or guarantee or other commitments has to be disclosed separately. If any company is having fixed deposit with the banks, out of which certain part is given as a margin money or a security for bank guarantees or other commitments like margin against installments, then those deposits or balances has to be disclosed separately and their details should be given. In some cases, funds are kept in current account, but current accounts are designated as escrow account. So such information should always be given under cash and cash equivalent portion. In respect of when cash and cash balances, cash equivalents are held in foreign currency or foreign banks, wherever there are repatriation restrictions, the matter should be disclosed separately. Bank deposits with more than 12 months maturity shall be disclosed separately in cash and cash equivalents. So, if a company has a short-term deposit for a period less than 12 months and certain deposits are kept for more than 12 months, then those are to be separately shown, or at least note should be given that certain deposits are separately shown, current assets and non-current assets, because it will affect your working for the ratio. Short-term loans and advances, we have a host of disclosures. Other current assets, current asset which do not fit with any of the specified heading has to be disclosed separately under other current asset, specifying the nature. Then contingent liabilities and commitments to the extent not provided for. If it is already provided for, either it will come under liability or provision. If those are not provided, separate disclosure need to be given. Other commitments, any commitment made by the management, if not disclosed, may result in misstatement of financial statements. So any commitment, if company has made any commitment, including capital commitment, the information should be disclosed. And in this regard, we are going to discuss management representation that we will discuss shortly. Disclosure can be obtained. So these were the disclosure regarding balance sheet, notes on accounts, statement of profit and loss, column 2 of the profit and loss format also refer to notes on accounts. The word C accompanying note to financial statement also appear at the bottom of the format of profit and loss. Para 2 capital A of the part 2 of statement of profit and loss in schedule 3 mandates the requirement as to disclosure in notes in respect of revenue, that is sale of products, sale of services, other operating revenue in broad heads. Then we come to para 5 of schedule 3, general instruction for preparation of statement of profit and loss, mandates various disclosure which are to be given in the notes on accounts. Those contains detailed list running into pages. I am not going to discuss those in detail, but certain matters I want to emphasize that certain details are to be given under broad heads. Work in progress at the beginning of the year, under broad heads are to be given. Consumption of stores and spare parts not to be clubbed under raw material consumption. It has to be shown separately. Normally it happened, certain items are clubbed in accounts. Take the example of rent, rates, taxes, insurance. Company might have a single account for all those items, but Schedule 3 requires a separate disclosure in respect of rent, rates and taxes, and insurance. So if profit and statement of profit and loss contain single head, note should contain separate disclosure about rent, about insurance, about rates and taxes, of course excluding tax on income. So wherever, one thing I would like to explain that Schedule 3 or certain materiality disclosure says that 1% of the total revenue or 1 lakh of amount can be clubbed under other expenses. But one thing should be kept in mind, wherever there is a separate disclosure required, even if it is less than 1% of the revenue or 1 lakh, it has to be shown as a separate line item, either in the statement of profit and loss or in notes. So even if a company pays a few thousand rupees rent, though otherwise it can be clubbed under other expenses or miscellaneous expenses, it should be shown separately as a rent in notes on account, irrespective of the amounts. So clubbing of the less than 1% or less than 1 lakh as other item of income or expenditure is applicable wherever separate disclosure is not specified. Certain items are always lost sight of, that is payment to auditors. Auditors charge for separate services like audit, taxation, tax audit, company law, management services, reimbursement expenses. Company might have one single account as payment to auditors, but a disclosure is required in notes on accounts for separate services payment made. Details of extraordinary items and prior period items are required separately. So what are the extraordinary or prior period item? That will depend, and we have guidance for them in our accounting standards and auditing standards. Certain disclosure about the imports earning in foreign exchange is also required. Now in certain forum, it was discussed that whether this should be disclosed in foreign currency or in Indian rupees. In my mind, if we are giving all the figures in Indian rupees, the value of imports calculated on CR basis or earnings in foreign exchange on FOB basis has to be disclosed in Indian rupees only, because the company might be importing from various countries having various currencies. So when there are cross-currency transactions, so disclosure in separate currency would not give any detail information or add any importance. Instead, aggregation in rupee terms of all imports or export details will be important. So friends, those were the requirements under Companies Act. We have also accounting standards which require certain relating to notes on accounts. Now going to this, we have AS1 which is applicable to all accounting entities including companies. So as per accounting AS1, accounting standard 1, all accounting policies to be disclosed at one place, changes in accounting policy and deviation in fundamental accounting assumptions like going concern has to be reported or disclosed, and if not disclosed, auditor has to comment on it. How to present notes other than accounting policies. Accounting standard for non-Ind AS companies, notes on accounting and non-accounting standard. Those specific disclosure requirement is not given for presentation of notes to accounts. The guidance can be taken from Ind AS 1 as well as para 3 of general instruction of Schedule 3. So whatever is given in Schedule 3 of Companies Act and Ind AS 1, that can be followed while preparing notes of accounts even for non-Ind AS companies. In preparing financial statements, including notes accounts, balance shall be maintained between providing excessive details that may not assist users of financial statements and not providing important information as a result of too much aggregation. Disclosure required under various AS should be given by way of separate notes if not covered under notes relating to financial statements. So various accounting standard requires separate disclosure by way of notes of accounts. For example, related party. So if those are not given under notes under Schedule 3, those are to be separately given. Now, one question is always asked, sometimes asked, whether notes of accounts are required for Section 8 companies or non-profit making companies. Of course, Schedule 3 is a part and parcel. of companies account. Schedule 3 is also applicable to Section 8 companies. Accounting standards are also applicable to Section 8 companies. Hence, notes of accounts are also required for Section 8 companies. Then we have S21, which contains various provision for the notes for consolidated financial statements, which may not be relevant wherever consolidation is not required, but it gives a guidance about what note should be given in CFS and what should not. So notes appearing in the individual financial statements, whether to be given or whether to be repeated in CFS or not, it has to be taken into account, whether it is important, whether considering the impact, overall revenue and overall profit of that individual entities, this one. So material notes is to be disclosed. Additional statutory information in separate financial statement of the subsidiary and or a parent having no bearing on the true and fair view of the CFS need not be disclosed in the CFS. An illustration of this is given in the S21. Now, Ind AS, though not applicable to small and private limited companies in general, but Ind AS has a detailed structure about notes of accounts. A cursory look at it will show that presentation of financial statement should be as per para 112 to 117 of Ind AS. So notes should contain basis of preparation of financial statements and accounting policies. So this should be the chronology of presentation of notes. Disclosure of information not presented in financial statement prescribed under Ind AS. Information relevant to understanding financial statement. There should be cross-referencing of notes in balance sheet and statement of profit and loss. Order of presentation should be compliance with Ind AS, summary of significant policies, supporting information, other disclosure, including contingent liabilities and commitment. Disclosure requirement should be as per para 118 to 113 of Ind AS. So what is relevance of notes to accounts? What is the relevance of notes of accounts and audit reports? Why it is important to auditors? Now going back to the opinion para in auditor's report, auditor of a company has to state that whether the financial statement give the information required under Companies Act in the manner required. Give the information in the manner required. So for this reporting, auditor doesn't have any leeway. If any part of the information is not given, which is required under Companies Act, auditor should qualify the report or should give disclaimer or should at least have certain disclosure in his emphasis part. Suppose repayment of loans, schedule and detailed terms are not disclosed in notes on accounts. The auditor should contain the reference of same that this information is required under Schedule 3 and it is not disclosed. Secondly, under Section 143(2) of the Companies Act, the auditor's report has to take into account accounting and auditing standard with other matters. So whatever disclosure is required under accounting standard, that auditor has to take into account under Section 143(2). 2. So that is also mandatory because auditor has to follow this. If this is not followed, if such disclosure is not made, the reference of this or qualification, if required, or at least mention of this, that notes on account doesn't give, for example, if related party transactions are not disclosed, are not properly disclosed, the auditor must state in his report that related party transactions are not disclosed. If auditor fails to explain this, fails to report this, he is not reporting under Companies Act correctly and properly. So friends, what will be the consequences if notes of accounts are not disclosed as per Schedule 3 and as per AS or Ind AS, or either of this is not followed in respect of disclosure under notes of accounts. So for companies, under Companies Act, so whatever penal provisions are given, that will follow to company, officer in default, or under SEBI guidelines, certain disclosures are required. If those are not given, that will be required. For auditors, auditor will also be liable under Companies Act for not following the provisions under Section 143, and penal provisions might be attracted. But secondly, worst part of it is, if auditor fails to disclose that notes of accounts are not disclosed properly or not given, under Chartered Accountants Act, we all know Schedule 2, Part 1, Clause 5, fails to disclose a material fact known to him which is not disclosed in a financial statement, but disclosure of which is necessary making in such financial statement, where he is concerned in the financial, he is concerned with the financial statement as a professional capacity. This includes audit. Fails to report material misstatements known to appear in financial statement. Does not exercise due diligence, Clause 7, or grossly negligent, or fails to invite attention to any material departure from the generally accepted procedure of audit applicable to the circumstances. So observance of accounting standard and all legal provisions are provided under standard auditing practices. If he fails to invite attention for any material departure, auditor can be booked for professional misconduct. Then secondly, under Schedule 2, Part 2, if auditor contravenes any of the provisions of Chartered Accountant Act or the regulation made thereunder, or any guidelines issued by the council has issued guidelines that auditor has to follow all the accounting standard, auditing standards, and applicable legal provisions. So in this context, notes of accounts, disclosure is very important. Now, one question might be asked, whether notes of accounts in respect of non-corporate entity should be given. As far as non-corporate entity, where accounting standards applicability is there, S1 is applicable to all entities, irrespective of constitution, proprietor, LLP, cooperative society. So accounting standards mandate, S1 mandates accounting policies should be disclosed. Now the question sometimes asked is whether NGOs should give accounting policies, because audit report under Bombay Public Trust Act do not provide such provision. But friends, as we know, we as auditors, auditing under any other statute has to give a general format audit report under SA 700 series, which contains all these provisions. Their disclosure of accounting policy, if not given, it has to be mentioned, or applicable accounting standards and disclosure should be made to all entities to the extent applicable. For related party, EPS and all other might not be applicable for non-corporate entities. But in certain entities during tax audit also, whether it is applicable or not, that will be a question of debate. We have to find out whether it is a level 1 entity, level 2 entity, level 3 entity, and which accounting standard or Ind AS are applicable, which disclosures are given, are to be given. Because even under tax audit, Council of the Institute has declared that those are general purpose financial statements. And in respect of general purpose financial statements, to the extent reporting under general format as specified by the Institute under 700 series and accounting standards are applicable, and notes are to be given to the extent applicable, though Schedule 3 might not be applicable for non-corporate entities, but basis of applicability under AS and SA has to be considered and reporting has to be made. With this, I conclude the first part of this one. Should we move to second part? Or should we discuss certain issues if anybody is having queries?
If any queries on the first part, let us take that, sir. Otherwise, we'll move to second part.
Anybody can ask. I think nobody is having any query. Let us move to second part. That is written representation, popularly known as Management Representation Letter or MRL. So now coming to the first part, definition. What is MRL or written representation? A written statement by the management to confirm certain matters or to support other audit evidence. Written representation in this context does not include financial statements, the assertion therein, or supporting books and records. So it is a supplementary confirmation from the management, but exclusive of the financial statements and supporting record like books of accounts and records under accounting records. So what is the written representation and where it find a place? We have standard on auditing, SA 580, which deals with written representation. SA 580 deals with the auditor's responsibility to obtain written representation from management and where appropriate, those charged with the governance. A necessary information that the auditor requires in connection with the audit of the entity's financial statements. Written representations are audit evidence similar to response to inquiries. They do not provide sufficient appropriate audit evidence on their own about any of the matters with which they deal. Furthermore, the fact that management has provided reliable written representation does not affect the nature of extent of other audit evidences that the auditors obtain about the fulfillment of management's responsibilities. So written representation is an additional requirement and is not a substitute. It is not like that you obtain a MRL or written representation and without conducting any of the audit process or audit evidence, sign the balance sheet. It is a sort of written confirmation. We find that many times written during the audit, we confront with the management confirms something which ultimately we have to document in form of MRL or written representation. Written representation is a tool of audit evidence. Audit evidence is all the information used by the auditor in arriving at the conclusion on which the audit opinion is based. Accordingly, similar to responses to inquiries, written representation are audit evidence. It is a response to inquiry confirmed in written and audit evidence. Written representation provide audit evidence. They do not provide sufficient and appropriate audit evidence. They are audit evidence, but are not sufficient and appropriate. It has to be kept in mind. Written representation do not dilute auditor's responsibility to obtain other audit evidence for matters covered by written representation. If the management says that they have conducted the physical verification of inventory in writing, in MRL, but that doesn't say that auditor should not corroborate the other evidences for physical verification of inventory or like. What are the objectives of the written representation? To obtain written representation from the management and where appropriate, those charged with governance that they believe that they have fulfilled their responsibility for the preparation of financial statement and for the completeness of the information provided to the auditor. To make our management what is their responsibility, that it is the prime responsibility of the management to prepare the financial statement. Unless they sign it, merely auditors saying that it is the responsibility of the management, it is not sufficient. To support other audit evidence relevant to the financial statements or specific assertion in the financial statement by means of written representation. This is one of the objectives. To respond appropriately to written representation provided by management and where appropriate, those charged with governance do not provide the written representation requested by the appropriate. In response to written representation, auditor has to respond through audit report or further response will result into audit report. So what should be the form, date and period for MRL? The written representation shall be obtained in the form of a representation letter addressed to the auditor. It should be not in the form of a certificate or like a to whomsoever it may concern. It should be addressed directly to the auditor's firm. The date of the written representation shall be as near as practicable to the, but not after the date of the auditor's report on the financial statements. So the date of return representation should preferably precede the date of audit report. So yesterday also we discussed about the chronology of signing of the financial statement, director's report, auditor's report. So sequence in my mind is the financial statements are approved by the board. Then post-approval, auditor gives the audit report, and post-approval auditor's report, board gives the director's report. Auditor's report should precede the director's report because directors has to give comments on the adverse statements or qualification in auditor's report. But MRL should precede or should not be later than the approval of the accounts by the board. This fact should be kept in mind. And written representation should be for the period referred to in the auditor's report. So if auditor is giving report, normally annual report we give for the financial year. So written representation should be for the period referred in the written representation should be for the year. But when there is a quarterly or half-yearly review report, wherever required, the written representation obtained should give that period in its representation letter. Well, what should be the contents of MRL? Management has fulfilled its responsibility for the preparation of the financial report in accordance with the applicable financial reporting framework, including wherever relevant, their fair presentation as set out in the terms of audit engagement. The contents of MRL should also provide that all relevant information access as agreed in the terms of the audit engagement is given to the auditors. If management cannot produce certain evidences or cannot give certain information and access to the auditor because of certain reasons, the matter should be taken in MRL so that auditor can report the same in audit report or can have emphasis on the same in his emphasis para on audit report. Suppose, take the example, if auditor is not provided certain information, and if this matter is not mentioned in audit report, sorry, MRL, in the auditor's report in audit report, that certain information is not given to us, then the management may ask the auditor that you did not ask for this information. So how you are going to report this, that this information is not provided? Or where there are certain limitations. Sometimes accounts are seized by GST authorities, tax authorities. Or certain accounts or certain documents are submitted in court of law, original, are not provided, are kept with the bankers. Say original purchase deed, original lease deed, certain when finance are taken. Then confirmation that original documents are lying with the bank and certificate from the bank has to be obtained and details has to be taken in MRL so that the mention of same should be also given in notes on accounts and audit report if required. All transactions have been recorded in the account and records are reflected in the financial statements. This is one of the content of the MRL which should be obtained. Suppose any transaction remain to be recorded, it is always the responsibility of the management. So management should not take the stand that you should have inquired and you should have made us to report and include this transaction in the account. So this declaration needs to be taken in MRL that all relevant transactions are recorded in the accounts and reflected in financial statements, and no transaction remains to be accounted. So responsibility of the management in designing the system, implementation of internal control, prevention and detention of fraud is the responsibility of the management. This should be stated in the MRL. Whether management has disclosed to the auditor result of management assessment of the risk that the financial report may be materially misstated as a result of fraud. This is required as per SA 240. Whether management believes significant assumptions are used in making accounting estimate are reasonable as per SA 540 has to be contained in SA. So these were the broad items which were to be required. So details of the items may vary. You need not include the financial statements or data in the financial statements in MR, but supporting or details can be obtained. From whom to obtain MR? So normally written representation on MRL are requested from those responsible for the preparation and presentation of the financial statements. Normally, roughly it is called management. So who is the management? The board of directors. Then board of directors gives the responsibility to the managing director or CFO or CEO. These individuals may vary, may change from company to company or entity to entity, governing structure of the relevant law and regulation. However, the top management is responsible and this responsibility is given to the specific individuals. So written representation may therefore be requested from the entity's chief executive, CEO or CFO or other equivalent person in entities, which some entities do not have such title as CEO or CFO. There is a manager who looks after everything, who is the assigned the responsibility of everything. So the written representation can also be signed by him. So individuals who have specialized knowledge relating to the matter, such individuals may include. So certain special representations are required. In case of actuarial valuation for employee benefit provision, actuarial accounting measurements are to be given by the actuaries. There might be certain legal claims for which internal counsel may give a representation. There might be in-house engineers who are specialized in knowledge about any measurement, liability, they can give MRL. In certain cases, very highly technical products in chemical industries or technicality, the stage of completion in case of construction industries. We can rely on the representation from the expert like engineers, technicians, architects, and our auditing standards also permit it, relying on the expert. Other written representation. Other standards on auditing requires the auditor to request written representation. If in addition to required representation, the auditor determines that it is necessary to obtain one or more written representation to support other audit evidence relevant to the financial statements or one or more specific assertion in the financial statement, the auditor shall request such other written representation. There might be special cases. So there might be fire. Stock might have been destroyed. Say 40%, 50%, management says 50%, 60%. This is a technical estimate. The auditor can ask for the written representation for expert in such cases. So in specialized situation, like when there is, say, diminution in the value of investment held by the entity in subsidiaries or other entities, associates, where auditor is not the principal auditor, is not the auditor. The auditor may ask for the extent of diminution for making provision or ascertaining whether the provision for such diminution in the value is correct or not. Such standards on auditing may require such representation, which will vary on this one. So we have various auditing standards where we can have written representation. Those are listed here: SA 230, SA 240, 250, 260, 450, 501, auditing accounting estimates, including fair value accounting, valuation, even for related parties. So related parties list is so vast under auditing standard and under Companies Act. Accounting standard and it might be different in certain cases. So we may have a written representation for each type of related party, at least which parties are considered as related parties. In respect of a going concern, particularly it happened in case of COVID situation, in case of certain companies. In case auditor may not be expert to assess the going concern concept, then he may ask for the expert opinion in support of the MRL. So it is a frequently asked question, what should be the format of the MRL or written representation? A suggestive format is given in our SA 540 by the ICAI, but in my opinion, it is not mandatory. It is indicative and need to be modified as per facts and relevance of the audit and requirements. So in case of doubt about the MRL, the effect of such representation and audit evidence in general has to be concerned oral or written representation, concern about the integrity, ethical values and diligence of management, or about its commitment. If it is doubted, the reliability of management and audit evidence in general may be in doubt. In that case, auditor has to perform audit procedures to attempt to resolve the matter in case of written representation are inconsistent with other audit evidence. If other audit evidence and MRL are inconsistent, then he has to reconcile and take the decision while reporting. If the matters remains unresolved, the auditor shall consider the assessment of the competence, integrity, ethical values, or diligence of management, and shall determine the effect that this may have on the reliability of representation and audit evidence in general. So he has to wait, not just obtain the representation or MRL, other audit evidences and representation are matching, and on the basis of it, reliability, integrity of the management has to be heard. If the auditor conclude that the written representation are not reliable, the auditor shall take appropriate action, including determining the possible effect on the opinion in the auditor's report in accordance with SS 705. So if auditors decide that MRL is not reliable, he can modify his opinion, he can give emphasis, he can qualify his audit report. We do not find any place of MRL or written representation under Companies Act. But even under why it is relevant in Companies Act? Basis of opinion para of auditor's report, which we report under Companies Act, has to state that whether audit was conducted in accordance with standard on auditing specified under section 143(10) of the Act. And under section 143(3), auditor has to report under section, auditor has to report after considering applicable accounting and auditing standards. So SA 540 and 580 are applicable to the auditor. So report under section 143(10) and 143(3) refers to this essay. So though written representation is not mentioned in Companies Act, in view of audit requirement, the applicability of SA 580 is mandatory in company audit, and auditor must obtain MRL from company's management. Next question is asked, is MRL required for non-company audit? Audit under Cooperative Societies Act, LLP Act, tax audit under Income Tax Act or GST Act, Maharashtra Public Trust Act do not mandate obtaining MRL. But standards on auditing issued by ICAI are to be applied in the review of historical financial information. The institute says that all essays issued by ICAI are to be applied in review of historical financial information. Review of historical financial information includes audit, and there is no exemption provided under section provided for SA 580, and hence MRL is also to be obtained in case of non-company audit. So friends, ask yourself whether in case of tax audit, we are obtaining MRL. Whether we are obtaining MRL from cooperative societies, cooperative banks, or public trust, even small public trust. So this is mandatory under SA 580. So we must obtain MRL. It is mandatory. I think those who are not obtaining should ask for it. First time we will have a very funny reaction from the management or trustees or partners or directors of societies. What is this? You never ask for it. It is not required. There might be resistance. But We have to convince them. It is a part of our audit process. Unless this is completed, we cannot give audit report. Even if management refuses to give MRL, mention this fact in MRL that you have requested for management representation and this is refused or not issued. So in my opinion, MRL is required for all types of audit assignment. I think, are we having some times to discuss some few case studies on MRL?
Yes, sir.
Huh? How much
Yes.
time?
Sir, we will take it up to 7:30. Max 7:30.
Okay. So these were the general provisions regarding MRL for corporate, non-corporate SEC entities. So now we will have a certain 2-3 case studies. So case study in respect of bank branch audit, expert and company auditor bank of audit is auditing the advance of essential supply with the LLP, repacker and distribution of edible oils, was raided by the drugs administration. This is a real life case study. The godowns and storage facilities are sealed by the authorities. The firm enjoys CC limits secured against hypothecation of stock. Due to Ukraine-Russia war and export restriction by Malaysia on edible oil prices are skyrocketing. Yes, am I audible?
Yes, sir, you are audible. Just we need to mute some participants.
The management of essential supply LLP has given stock statement of seized material, which is seized for more than 6 months by the authorities. The bank management claims the loan has fully secured and produces the stock statement for last 6 months, which are not moved for a long time. So essentially, non-moving item is disclosed as a security by the borrower, and as a bank branch auditor, what will be the reaction of auditor? So due to non-movement of stock and being food item, so the first thing we should be questioned whether it is a potable. If it is a edible oil, if it has lost its quality of potability, then its valuation will be in danger. Then what should be the security value? So for this type of aging stock, auditor might not be expert, bank management might not be expert. So it might have a relevance on treating the asset as a secured, unsecured, and making a provision, because when there is no movement in stock, we have this one. So in this case, technical experts should be sought for treating the asset as good and secured, otherwise the auditor should modify the opinion under SA 540. Does anybody have any comment or this one in this type of situation?
We are looking for the issue. We'll sort it out in a minute or so.
Hello. Am I audible?
Sir, you are audible.
Yes, sir. Yes, sir.
Another case study, expert and company auditors of Doubtful Limited obtained a representation from the management that the inventory is included in the financial statement physically existed as on the balance sheet date. But according to the auditors, it was inconsistent with the other audit evidences obtained. So what the auditor should do? So because the audit is being carried out after the balance sheet date, expert and company auditor may adopt the following procedure to resolve the matter: physical examination of inventory items at later dates, obtaining confirmation of inventories at location outside the entity, inspection of documents relating to inventory transaction between physical inventory date and balance sheet date. So after following the above procedure also, the matter remains unresolved, then expert and company shall reconsider the assessment of the competence, integrity, and ethical values of the management, and shall also determine the effect on the reliability of the representation and audit evidence. If auditor consider that the representation is unreliable, then he shall modify his opinion as per SS 705. So modify may remain disclaimer or qualification or emphasis depending on the facts of the case and situation. So the last case study, it is exactly not a case study, but it is a reference of MRN in Audit Quality Review Report dated 27th August 21 in the matter of Jay Prakash Associates Limited for 2017-18. We know the audits of listed companies are reviewed by the Audit Quality Review Board. There was a note in the accounts of the company, long outstanding non-current asset receivable of rupees so and so crores. It was in auditor's report. Audit reported that on the basis of the contractual tenability, progress of negotiation, discussion, arbitration, litigation, the management considered the receivables are fully recoverable. This was the emphasis given in audit report, in para, about recoverable of rupees, a big amount. So NFRA, NEFRA, popularly we know, has raised a query about that the working papers of engagement team, that is audit team, contain only claim receivable. They were not documented as to any verification of arbitration award, litigation status, details of claim and legal opinion. So NEFRA pointed out in audit report, a para in auditor reports, and after investigation or after inquiry, gave this query to the auditor. So I am reproducing here from the quality review report para 5.3, which pertains to SA 580, that is MRL. Para 3 of SA 580 clearly state that although written representation provide necessary evidence, they do not provide sufficient appropriate evidence on their own about any of the matters with which they deal. Hence, in absence of any arbitration order, litigation order in favoring company, and legal opinions to support the management contention that those non-current trade receivables aggregating to rupees so and so crores are fully recoverable. ET, that is audit team, has failed to obtain sufficient appropriate audit evidence and also to ensure that these non-current trade receivables are not materially misstated, hence providing opinion para on such an important financial statement is not in accordance with para 6 of SA 706. So SA 580 mandates obtaining MRL. So mere obtaining MRL, and even if you give reference of it in emphasis part, which is not corroborative with other audit evidences, the NEFRA has reported that this is not accordance with the SA 706, that is reporting. So reporting was related to 580. So mere obtaining MRL is not relevant. All assertions, all statements in MRL should be corroborated with the documents obtained, audit evidence required, audit evidence collected, gathered. If auditor fails to obtain such evidences, though MRL is obtained, auditor may be found guilty and may have to face consequences thereof. This is a real life case. Entire report of NFR is available at the link given in the slide. So these are the few cases or few situations which I wanted to share with you. Friends, with this, I conclude. I think I'm able to explain everything. Albert Einstein has once stated, if you can't explain it simply, you don't understand it well enough. If I am not able to explain it simply to you, it is my fault that I have not understood the subject enough. With this remark, I conclude my session. Thank you very much. If there are any queries, I would be answering the same. Thank you. Thank you very much.
If any queries, please straight away unmute yourself and please ask the queries.
नागा सर,
Yes, sir.
फक्त आता म्हणजे हा नवीन कारो, नवीन शेड्यूल 3 आणि
Yes.
नोट्स टू अकाउंट्स, म्हणजे नोट्स टू अकाउंट जनरली खूप वेळा म्हणजे आपल्याकडून काय होतं का फ्लॅग एंडला नोट्स टू अकाउंट्स किंवा MRL कडे लक्ष दिलं जातं आणि तुम्ही सांगितलेल्या बऱ्याचशा इम्पॉर्टंट गोष्टी सुटतात किंवा त्यामध्ये काहीतरी चूक होते किंवा कॉपी पेस्ट मध्ये तरी चूक होते.
Yes.
ती काळजी नक्कीच घेऊ. थँक्यू फॉर दॅट टू द ब्रँच ऑल्सो अँड यू ऑल पीपल 5 days. सेकंड, आता जे म्हणजे कारो आणि शेड्यूल 3 ला जी रिक्वायरमेंट आलेली आहे, जी आता म्हणजे जयप्रकाश इंडस्ट्रीजची जी केस लॉ रिफर केली आहे, बऱ्याच वेळा बँकर्सला लोक डेटर्सचे एजिंग देताना 90 days किंवा 90 to 180 days देतात. परंतु आता ज्यावेळेस हे म्हणजे जरी म्हणजे देर आर 2 cases वेअर द ऍक्च्युअल गिव्हन टू द बँक ऍट द क्वार्टर एंड स्टॉक इज डिफर, debtors are defer, creditors are defer.
Yeah, it is going to happen.
Second thing, where the stock is defer, valuation is defer, but quantity is correct. How to disclose it? Quantity is correctly mentioned in the stock report, but there is some valuation difference was there. Third, aging of the debtors as now determined as per Schedule 3 and as given in the statement.
Yeah, I do understand because aging has a different concept in software, in the business parlance, and as understood in Schedule 3.
Yes.
So due date, not from the date of transaction. In some cases, software take it from the date of accounting entry.
Yes.
Or there, this one accountant has to enter the time limit, the date of transaction. So accounting entry is taken as a date of transaction in some software, particularly ERP software. Some ERP software has a provision or modification to that extent. But this is going to be a practical issue. If there is no material, so in my opinion, we have to see the entire picture in perspective of materiality. If there is a, say, 5% variation in stock valuation or debtors, so debtors should not be major variation. Stock valuation can have a variation when stock statements are submitted to banks and audited statements. But debtors figure should not, in the era of GST, should not change materially. May change due to subsequent credit notes or like that. It might be possible, or certain discounts and other entries also. But if it is not a material, so we know the client, we know the accounts. So whatever I have insisted, those reliability, integrity of the management is relevant. After all, you are relying on the MRL also, you are relying on the evidence given by the management also. So audit is not investigation. So you cannot suspect the audit evidence or representation on the face of it. But unless there is a contrary evidence, you should accept the face on it. If there is a material variation in stock statements or debtors valuation or debtors statement, you should ask if there is a genuine mistake. The client may be advised to file a revised statement with a covering letter. If acknowledgement is obtained, I think if there is no major variation, you should report that there is no material variation. So it is going to be a practice. If unless there is a material variation and you have a reason to believe that there is a quality of management is not good and they are giving wrong information, you should give either disclaimer or qualification or emphasis part on it. So that will depend on each situation, quantum. If debtors are say 50 crores and ultimately you found it is a 49 crore or 48 crore due to certain this one, this is not going to make any much difference. But if somebody reports stock of 50 lakhs and ultimately it's found to be 30-40 lakhs, and even after there is a margin is not maintained, then you should report it. That is my suggestion. So you have to take call on individual basis. There cannot be any generalization.
Okay. Thank you, Daga ji.
Yes, sir. Thank you.
Sir, one query in the chat box. What if the closing stock contains lots of items like raw material, finished goods, even stock of land, immovable property, multiple items, how we have to disclose it?
Stock may contain stock of raw material, WIP, finished goods, stock in construction accounts, immovable property, purchase for sale, how to show in inventories. I think what I understand from the query, it is a how it should be disclosed. That is the query. Am I correct? So disclosure requirement in respect of inventories. That is the major query or intent of the queryist, I think. So in this respect, we have clause O, which says inventory shall be classified into raw material, work in progress, finished goods, stock in trade, in respect of goods acquired for trading, stores and spares, loose tools, and we have other specified nature. So first 6 items are to be specifically given. If there is any item, on others you can include immovable property purchase held as an inventory. So inventory of immovable property will be shown in others, that is immovable property for sale. If your accounts you are maintaining subsections in inventory of immovable property like constructed property, plots, raw land, then you can also have a subheading like that. If you club everything in one group of immovable property, then you can have one line of item under others, under main heading of inventories as immovable properties. If in accounting, you treat inventory of different types like constructed inventory, constructed properties, open plot, and raw land, then you can have 3 different lines item also. And stock, I think raw material, finished goods, work in progress, stock in trade, stores and proppers and loose tools are the regular 6 items for all trading and manufacturing other companies. But inventory of this one, if you have broad heading, it can be classified under others.
Okay, sir. Any other query? I think, sir.
एक क्वेरी था अभी दागा सर.
Yes.
हेलो, संदीप खंडेलवाल सीए बोल रहा हूँ.
हाँ बोलिए सर.
सर सेशन बहुत अच्छा हुआ और इसमें सर अभी जो राउंडिंग ऑफ का जो कंपल्शन आया हुआ है शेड्यूल 3 में, तो अपने को जो 3CD के साथ में जो कंपनी का जो ऑडिट रिपोर्ट अपन स्कैन कर जो करते हैं ऑडिट रिपोर्ट, तो अभी इसमें 2 बनाना पड़ेगा क्या? फिर एक एक्चुअल फिगर्स और एक ये जो राउंडिंग ऑफ के साथ.
As far as 3CD is concerned,
बाय. हो तिकडे जाऊ नको. शर्या पाणी घे.
see, as far as 3CD is concerned, in respect of companies, we are attaching the balance sheet. We are attaching the balance sheet signed under Companies Act. So, as far as attachment of balance sheet and financial statements along with 3CD is concerned, if financial statement signed under respective statute under Companies Act or Cooperative Act has to be attached. So you will not prepare financial statement separately for companies. But while reporting figures in Form 3CD, individual figures, you have to give the figures up to last rupee and not rounded. So financial statements will be in rounded figures, but individual figures in Form 3CD will be non-rounded figures to last rupee. That is my personal opinion.
Okay, sir.
Because you are attaching the statement signed and attached along with the audit report. So under Companies Act, you are attaching the financial statement which were rounded.
Other
You
participants,
need not
please
prepare
mute
separate
yourself.
balance sheet.
video
Your statutory requirements are having audited balance sheet in rounded figures. Hope matter is clear. Anything else?
Yes, sir. And in case of notes to account, we have to put the figures as we have rounded off the actual balance sheet. Accordingly, we have to put the figures in notes to account. No?
No, I don't think in 3CD rounded figures are to be given.
No, sir. In notes to accounts to balance sheet in Companies Act.
So notes to accounts will be rounded figures only.
Okay, sir. Thank you.
Because you cannot have two figures. I think this this matter was already cleared, discussed by the our learned speaker on this one, Schedule 3.
Thank you, sir. Thank you.
Thank you, sir. I hope all the queries are resolved. On behalf of Nashik branch, I thank our own beloved member, Rajendra Daga sir, for taking us through a great ride of understanding various representation, how to be taken, and basically the role of auditor to be seen. Once again, thank you, sir. Thank you for enlightening us with your knowledge and wisdom. A gentle reminder for tomorrow's interactive meet at Nashik branch with Honorable Member of Parliament Supriyatai Sule. So I request all the members to please come and attend the same and have an interactive meet with our Member of Parliament. Thank you once again to all the participants for the entire study course. I hope it would have benefited you, and we look forward to take many more such study courses over a period of time. Thank you. I declare that the session is open.